This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I had mentioned a few things in regards to the internals. Number one, that the dollar was stabilizing right here on this 97.99 area. Let's just call it 98. And was moving into the next line, which was 98.78. And now we need to push into that 99.40 again. That was the level where we had the ceasefire headline back on Wednesday, April 8th. And you know what happened to the markets. And then, of course, earnings. And you know what happened to earnings expectations, ratcheting up the AI trade. So we've had a very momentous earnings season. It's not over. NVIDIA reports next week, same day after effect where we get on May 21st, potential Samsung strike, which is a massive memory player in South Korea and has heavy weighting in lots of the DRAM ETFs that we've been tracking. And we also have the verdict between Musk and Altman, also on May 21st, and NVIDIA reaction. So we'll see how that goes. In the meantime, Trump is back or coming on back and has said lots of soft, nice, pretty words, but got no hard reaction of resolution on any issue. And I went through the 5 issues yesterday. So there really wasn't anything to write home about. Iran's oil, which Trump is blockading, which China depends on, isn't being stopped. But definitely there was no resolution there of China helping Trump get Iran to succumb. Definitely nothing related to NVIDIA's H200 chips. Also, China continues to claim they don't need them. Absolutely did not touch the red hot button, which was U.S. arm sales to Taiwan. And then basically all the talk of U.S. triple-digit U.S. tariffs on China, which prompted China's rare earth ban and exchange, also went nowhere fast. So the dollar's starting to escalate a little bit more, and that has caused precious metals to sell off. As warned, I was very focused on the dollar. And I'm also focused on the internals, which is repeatedly the call mania that is chasing gamma squeezes right now. And then, of course, the fact that my internal indicators had warned that breadth was starting to roll over hard this week, and selling underneath the surface had picked up speed starting last week. Now, yesterday we had a little day of stabilization, and you can kind of see it here where the Qs up here, they got back above 715 from the Monday high and then looked oh so pleasant, and we have a gap down below 715, and in fact 707 was tagged this morning in the Qs, and it's not because of Applied Materials, which had earnings after the bell. It is just getting above its skis. That's how it works. But we also had, in addition to the breadth breakdown I warned about and the selling underneath the surface that I warned about, which creates an air pocket of risk, we also have a global yield rise, not just the 10-year, but you can see the 10-year very much a macro headwind. So we closed in this kind of 4.45 area. This morning, we're hitting 4.57. You know, winner, chicken dinner. This is global yields, the gilts, the Japanese we've been tracking just is hot fire flames. So this is very much a yield story. This is very much an inflationary story, even if oil is not changed. So oil right now is crude is just under that 100 handle. I had mentioned had on the 2-hour anyway, some softness coming in. We did gap down to about 97, pushed back up to 101. But the point is, oil is not the instigator. It is definitely the swing play, as I mentioned in my write-up. So I said, careful, crude oil is a swing variable, but I am very focused on dollar and yields, to a degree yen. Basically, Besant through one of his, and this is what happened, Mike, when you saw the big move in the dollar yen. Besant hinted, again, this is not his first rodeo, that the Bank of Japan should raise rates to boost the yen. And that's what shook the currency markets yesterday. And basically, it was not an intervention. It was Besant pushing them to do an intervention to hike by June. And the Bank of Japan has basically pushed back and said, we don't want to. So we'll see how that goes. But in any case, in this little gap down on options expiration into next week, we can still chop in this grind sideways. But as I mentioned, watch that dollar. It's moving higher. likely on anticipation that as soon as Trump returns back to the U.S. soil, he and Netanyahu bomb Iran again. And I referenced a particular post where that looks very, very much in play. Also rising yields. Oil as the swing variable has not fallen, but the dollar moving higher has definitely helped equities come on down. And I even mentioned if oil collapses for whatever reason, be it the Hormuz opening, China opening, hantavirus, then gold, commodities, EU catches a break, all squeezes higher. This is not, however, my baseline bet. So anyway, we've got definitely a start to a potential backdraft in the AI ecosystem to basically remind or burn complacent bulls, especially into this Friday. And long story short, we have volatility that is starting to want to move higher, but it's a lot easier after the earnings season winds down. That's when VIX can wind up. All that stuff is just a review of everything that I already talked about. Wasn't anything that was particularly impressive as it relates to new stuff, but I have also reminded that gold, I see coming back down to this 4,200 handle for continuous. And then I referenced a speech just the day before by Gundlach, who is very much expecting the same. I also showed how we have this mania of 1999. No question about that. And in fact, I would also warn that this 1999 playbook isn't just in the call screaming higher, but it's also in the fact that the semis, that SOX index, is up more than 65% year to date and 50% above its 200-day moving average. And so that SOX index is what is creating the mania and the hype. So let's take a look at that. This is, again, here's your gold coming on down. That's in play. We've got dollar percolating higher in play. Yields, the reason for the season as a macro headwind, costs of financing, etc. Big, big, big issue. And then, of course, a little gap down on this Friday options expiration ahead of weekend risk. This was 2023, November 1st, Fed pause and yell and Yahtzee. Anyone who's been here for a while knows what I'm talking about. And then we had the May 2025, which was just after the April low in markets as well, when the bond market freaked out. And now here we are, May 2026. Check that out. May 2025, May 2026. We've gone nowhere fast, and we're sitting on this monthly support, and yields are saying, okay, now what? We need an intervention. Where does this go? Can you believe 80.51 for TLT is literally where we started with this index? Or I should say, is the low from this index back in May of 2004? Not kidding. So this would be target for potential support. And then I don't know, because we don't have any history, but it's a thing. Anyway, you know I'm a bond bear, yield and inflationista. I think dollar still rises up and markets come under distribution between now and summer. I'm much outside of the consensus. Consensus is this is 1999 and we're going to have a melt up. So we will need to get defended then pretty darn quickly right here, right now. If it's going to be defended, market's going to move higher. Yields are going to come back in. So place your bets.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.